Security Analysis and Portfolio Management, Unit 1, Part 5. In this unit, we will study about stock indices. In previous unit, we studied stock exchanges in India. Stock market indices or stock indicators. Stock market indices are useful in understanding the level of prices and the trend of price movement of the market. A stock market indices is created by selecting a group of stocks that are capable of representing the whole market or a specific sector or segment of the market. The change in the price of this basket of security is measured with reference to a base spread. There is usually a revision for giving proper weights to different stocks on the basis of their importance in the economy. A stock market index acts as the indicator of the performance of the economy or a sector of the economy. So, stock market indices means it is useful in understanding the level of price changes, movement in price, different trends in prices. These we will study with the help of stock indices. Stock market indices usefulness. Stock market indices are the barometers of the stock market. BSEs, Sensex, NSE 50, etc. are some of the market indices. Their usefulness: indices helps to recognize broad trends in the market. The investor can use the indices to allocate the funds rationally among the stocks. Technical analysts use these indicators to predict the future market. Indices function as a status report of the general economy. So these all are the usefulness of the stock indices. Criteria for selecting stock to calculate indices. First one, listing history. The company should have listing history on BSE for at least 1 year. The stock in which we should invest, it should have been listed in NSE or BSE for at least 1 year. Next, track record. The company should have listing history, means the company should be listed, then only we should invest in that company. Next, market capitalization. Company should have one among 100 market capitalizations of BSE, and each company should have more than 0.5% of total market capitalization of BSE index. Means among 100 market capitalizations of BSE, the company in which we are investing, it should be one among them. Next is frequency of trading. Company stocks should be traded on each and every trading day for the last 1 year. Next, industrial representation. Company should be a leader in the industry it represents. Means it should be a leading industry. Methods: market capitalization method. Market capitalization is the total worth of all outstanding shares of company. Outstanding means how many issued shares of the company. It represents the total worth of the company. So by this method we can calculate stock indices. Formula for market capitalization is number of shares outstanding into market price of shares. And the second method is free float marketing capitalization. Free float cap concept is an index construction methodology which makes use of free float shares in the market. Free float market capitalization is the total worth of all shares of the company which are available for trading in the open market. These shares are called free float shares and are available for trading by anyone. So, free float market capitalization means total worth of all the shares of a company which are available for trading in the market. Those shares are called free float market capitalization shares. Example: Company XYZ Limited issues 10,000 shares, out of which 2,000 shares held by government, 5,000 shares by directors of the company, and remaining 3,000 shares are available in the open market for trading. Market price of the share is 100 rupees. So with capitalization method we will solve this. First we have to write the given, that is total shares 10,000, shares held by government 2,000, shares held by directors 5,000, shares available in the open market 3,000, market price of share rupees 100. So with this information we have to calculate capitalization of the company. Here total market capitalization of the company is 10,000 into rupees 100. 10,000 is total shares and rupees 100 is market price of shares, and total is rupees 10 lakh according to market capitalization method. Next is free float market capitalization method. Here we have to take shares available in the open market, that is 3,000 into market price of shares rupees 100. So total is rupees 3 lakh. Calculation of Sensex and Nifty. Sensex calculation is practiced since 1986. Initially, it had been calculated using total market capitalization method, but the methodology changed to free float market capitalization since from 2003. Hence, these days Sensex is calculated using free float market capitalization of 30 major BSE listed companies and by using base value 100. 1978 to 79. Sensex is calculated for every 15 seconds. So, the formula to calculate Sensex is sum of free float market capitalization of 30 major companies of BSE into index value in 1978 and 79, that is 100, divided by market capital value in 1978 and 79. Then Bombay Stock Exchange BSE. Bombay Stock Exchange is the oldest stock exchange in India with a rich heritage of about 133 years of existence. BSE is the first stock exchange in the country which obtained permanent recognition from the Government of India in the year 1956 under the Securities Contracts Regulation Act 1956. Over the past 133 years, BSE has facilitated the growth of the Indian corporate sector by providing it with cost and time efficient access to resources. Sensex. The BSE Sensex, also called the BSE 30 or simply the Sensex, is a free float market capitalization weighted stock market index of 30 well established and financially sound companies listed on Bombay Stock Exchange. The 30 component companies, which are some of the largest and most actively traded stocks, are representative of various industrial sectors of the Indian economy. Published since January 1, 1986. The Sensex is regarded as the pulse of the domestic stock market in India. The base value of the Sensex is taken as 100 on April 1, 1979, and its base year is 1978 and 79. On 25th July 2001, BSE launched Dolex 30, a dollar-linked version of Sensex. As of 21st April 2011, the market capitalization of Sensex was about 29,733 billion, while its free float market capitalization was 15,690 billions. Some of the BSE indices are BSE 100, BSE 200, BSE IPO means initial public offer, BSE mid cap and BSE small cap. These all are the indices of BSE. Next, National Stock Exchange. National Stock Exchange of India, situated in Mumbai, is the largest and most advanced exchange with 1016 companies listed and 726 trading members. The NSE is owned by the group of leading financial institutions such as Indian Bank or Life Insurance Corporation of India. National Stock Exchange indices. The major stock market indices available at NSE are S&P CNX Nifty, CNX Nifty Junior, S&P CNX 500, CNX Mid Cap 200, S&P CNX Nifty. S&P CNX Nifty. It is an index calculated with a well-diversified sample of 50 stocks representing 23 sectors of the economy. The base period selected for Nifty is the close of price on November 3, 1995, which marks the completion of 1 year of operations of the NSE capital market segment. The base value of the index has been set at 1000. So in BSE it is set at 100 and in NSE it is set at 1000. Nifty is managed by India Index Services and Products Limited, which is a joint venture between NSE and CRISL. The index is known as S&P Index because IISL has consulting and licensing agreement with Standard & Poor's, who are world's large leader in index services. CNX Nifty Junior. It is composed of the next most liquid 50 securities, so much so S&P, CNX Nifty and CNX Nifty Junior together account for the 100 most liquid securities traded at NSE. The two indices are constituted in such a way as to be disjoint sets. That is, a stock will never appear in both the indices at the same time. Next is CNX Midcap 200. It is designed to capture the movement of the mid-cap segment or medium-sized capitalization companies. The medium capitalization segment of the stock market is being perceived increasingly as an attractive investment segment with high growth potential. The regional stock exchange also bring out stock indices calculated from stocks listed and traded at those exchanges. Many prominent financial dailies also bring out their own stock market indices. These all are the stock market indices.